I have walked through more market cycles than most people will see in a lifetime. I have seen booms that turned believers into millionaires and collapses that stripped life savings in the silent darkness before the headlines even changed. Right now, I feel it again. A quiet warning, a stillness before the storm. You glance at stock tickers flashing green, hear analysts talk about record highs, and feel the buzz of optimism, but beneath that brightness lies growing tension. I am not chasing hype. I don't ride on bubbles. I don't let emotion rule my money. I trust value, fundamentals, resilience. And in all those years, my greatest lessons were learned not in the heat of euphoria, but in the cold calm before the crash. Look around. Corporate debt is swelling. Consumer credit stress is rising. Inflation is choking buying power, and valuations are soaring beyond reason. Meanwhile, I have watched my own company accumulate a cash pile bigger than ever before. I'm not investing recklessly. I'm waiting for that crack when greed turns into panic. When the illusions fade and the real world begins to bite, you may ask, why keep cash? Why wait? Because when everything looks stable, that is usually when things are most dangerous. When everyone believes in rising prices, that's when the greatest losses happen. History does not warn you with sirens. It whispers before it breaks. And right now, history is whispering loud enough to be heard by those who still listen. There will be a time soon, and the signs are already visible when valuations get corrected. Not gradually, not by a little, but by enough to wake people up, shock portfolios, and rewire what they believe safe. What I'm telling you now may seem like fear, but it is survival, because in markets and in life, ignoring warning signs is the same as betting against your own future. You might see headlines screaming, recovery, resilience, bounce back, market rally. But those headlines are written by people who profit from hope, not by people who carry the weight of real money. I don't rely on headlines, I rely on data. And the data I see warns me deeply, relentlessly. My firm's cash on hand recently hit levels rarely seen in decades, not because I lack vision, but because I see scarcity where others see endless growth. I have watched sectors built on cheap credit, speculative dreams, and inflated valuations crumble under even a slight shock. I have seen companies survive bull runs only to vanish under the pressure of rising interest rates, reduced demand, and broken consumer confidence. This is not prediction, this is pattern. And patterns repeat. The same cycles that crushed investors in 2000 and 2008 were driven by greed, denial, over-leverage, blind optimism. Today, those exact same forces are back, dressed in new labels: tech boom, market optimism, growth stocks, easy money. But underneath the labels, nothing has changed. The danger is the same. The cost is the same. The result is bankruptcy, wiped savings, ruined retirement plans. Because the worst losses usually come not from obvious crashes, but from slow decay, from creeping inflation that eats value, from wage stagnation that strangulates consumption, from debt burdens that choke opportunity. When people stop spending, even the strongest companies stumble. And that's when the dominoes start falling. Some will call this fear-mongering. I call it truth, the kind that hurts, the kind that saves. I'm not here to offer you a quick win. I'm not here to sell you a dream. I'm here to show you reality, as bleak as it seems, and as urgent as it must be faced. Because once the market realizes what's coming, there will be no warning, only consequences if you want to survive, and maybe even prosper through what's coming. You need a plan. Not a hope, not a prayer, a plan. First, shelter, value over hype. Companies that produce real goods, offer essential services, have low debt and strong cash flow. Businesses that don't rely on credit-fueled bubbles or speculative mania. Second, liquidity. I keep cash, not because I don't believe in opportunity, because I believe in price. When panic hits, assets go on sale and their value can be found. If you are liquid, if you refuse to panic buy or dump everything at the bottom. Third, patience. Markets love to punish emotion. Panic, greed, impatience. They reward calm discipline. Long-term thinking, don't rush, don't react, observe. Wait, history rewards that. Fourth, skepticism, especially when the media shouts, everything is fine, because when attention is loudest, danger is often closest. And when trust in leaders, big banks, government promises, and financial media grows unquestioned, that is the moment to get alert. Because the next shock may not come from what you see, but from what nobody expects. I'm not saying this to scare you. I'm saying this to prepare you. And what I'm telling you is urgent. Stocks are overpriced. Debts are mounting. Consumer confidence trembles. Global uncertainties loom. It's a cocktail for collapse, for pain, for destruction, but also for opportunity, for rebirth, for those brave enough to see, calm enough to wait, and wise enough to act. because when the storm hits, it will not discriminate. It will not warn. It will uproot the unprepared, but it will reward the prepared. So choose now, choose wisely. And remember, in chaos, true value survives. In panic, discipline becomes power. In collapse, opportunity waits for those who refuse to lose. Listen to this warning, not because I ask you to, because your future may depend on it.